Hey, hello, this is Martin from SICH, the channel for learning about trading and investing. Welcome to Markets. Next week, the weekly stock market analysis show where we try to understand what exactly happened in the market from the technical charts and then plan for a better trade for the upcoming week that's starting from tomorrow, December 11, 2023. If you're not subscribed, please subscribe and share it to friends and colleagues so it reaches out to max. Thank you. Let's get into the charts. Here we go. This is the weekly charts of Nifty, the Banknifty that you're seeing left side Nifty, right side Banknifty. You clearly see the breaking out patterns. The flag 1, flag 2, flag 3. It's a last breakout, the second week of continuous breakout from the flag 3 is what's happening. And remember, we are moving and breaking out from the cup and handle patterns. Same with Banknifty also. Cup and handle pattern, multiple flag patterns break out in the process. Absolute bullish trend is seen. Weekly, another week. We are in a trend line channel within on the weekly on both indices, and we are on the top of the trend line channel, exactly at the top of the trend line channel. That's what we are. This is a daily view. We have broken out from the channel trend line and then vertically moving up on the top at 61.8 crucial Fibonacci extension level. The Bank Nifty also exactly at 61.8 Fibonacci extension level, breaking out that any big moves or break candles above the 61% on Fibonacci retracement or extensions on any stock is extreme bullishness. That's exactly where we are. But there is some red that is seen which does not show a solid breakout above the 61 extension Fibonacci yet, but absolute bullish trend and momentum that's seen in the daily charts as well. Here is a study of the candlesticks. The weekly candlesticks are showing a gap up. It's a professional gap, window gaps, both indices. And look at the size of the weekly candle. It's wide range bullish. It's very wide range bullish candle that is seen on the Bank Nifty weekly also, with a gap up, with a poro gap, both. Absolute bullishness, vertical moves, gigantic moves, no doubt about that. Daily charts, it's a continuation of the up move and then some consolidation for a couple of days and then a spinning top. Spinning top is small body, intensive on the top. There is some risk and there was a hammering pattern which did not work out. It could still work out, right? So any low that is made above below the the doji candle that is formed 2 days back, any lows, anytime it goes below those 3 of those candles, if you like, draw a trend line here, it is a continuation, it's a retracement beginning, you can see, but small body. But until that happens, it's just consolidating after vertical moves. Bank Nifty also, it did some pause, did some pullback, some profit booking has clearly come in 2 days back. But after that, it retraced, bounce up, change in priority, bounce up happened, and then market made another bullish wide range candle. So, but still, it has not broken out of the consolidation zone. It can happen the moment it moves above the Friday's candle's high. Same with the case of Bank Nifty and Nifty both. Right. So, extreme bullishness evident with small pause, smaller than what is expected. Like it should have been a bigger retracement after such big moves. It didn't happen. Very small. That means it can go further high up to 21,500 or maybe beyond that. You never know. But a retracement is due, that is for sure. But when does it happen? We never know. There's no way to predict that. When does it? But it will happen eventually. It has to happen. It will happen very soon is all that can be told at this time. Look at the Bollinger Bands. This concept is known as expansion of the Bollinger Bands. Bollinger Bands expands on the upside or downside. Market is expected to further move in the direction. Here it's continuously expanding, which shows that there is scope for further up move. And it is also having a walking on the bands concept, which means it is not away from the band that is expanding. It is very close tied. That is walking on this extreme bullishness. Same with Bank Nifty. It is walking on the bands. But remember, it is far away from the median, that's 20 moving average. So further it is away from the Bollinger Bands moving average, there is more probability that anytime it will get attracted back towards that levels, anytime, over a period of time. It may not be a big down, but eventually it will come and settle near the Bollinger Bands. That also, so more it is far away, more likely that it will get pulled, attracted by the moving average. But absolute expanding extreme bullishness is what Bollinger Bands also is predicting. Now, before coming to the support and resistance, let's go back and summarize what exactly happened. Right. So we have a further breakout, continuation of the breakout, and an up move of 6 consecutive weeks in Nifty. Right. It's a continuation of the breakout already happened last week. It is a continuation of the breakout, making newer all-time highs most of the days. So it's 3.45%, 700 points in a single week. That's 1,170 points. It's nearly 6% gain in just 2 weeks. 2 weeks, 1,170 points. Hardly 9 or 10 days of trading. Right? So it's wide bullish range, no doubt about that. So 11.3% of it up move has happened from the previous swing low after the first retracement of 9% or something happened. So it was moved much beyond what it has retraced. And the rally is continuing. Remember, the rally is starting from the previous swing low. The rally has been there, although retracement came in between. It is a 25% rally now up from the cup and handle and the flat pattern that we already see. Banknifty also, this week was 2,436 points, 5.43% up in just one single week. That's 3,472, nearly 8% of move in just 2 weeks. Can you believe that? And it has formed a weekly white which can be seen. Banknifty is also 22.5% up move from the previous swing low. Just from the previous swing low, just immediate previous swing low itself is only, it is 12% more. And both are above weekly expansion moving average. Daily charts also less than 5% in Nifty 0.68, but absolute near to 1% of 421 points. White range bullish candle. All are above the 20, 100, 200 expansion moving averages. So it's all-time highs and all-time highs, big vertical moves. So the question is, how much more steam is left for this rally to go up before it consolidates? Or would it wait and consolidate right away from Monday? Right? Before consolidate and then or would it retrace before the next level? All these are questions that we can only keep watching the candlesticks and the patterns and then take. You don't have an immediate answer on what will happen, right? So that's it. So Bollinger Bands, we've already seen that it is expanding mode upside. We already talked about that enough. Let's get back to the support resistance level. So first of all, it's right now very close to 21K. So 21K would be a first resistance since it is close below that. That's first resistance. After that is cleared, it's gray area, but it can go up to 78% Fibonacci extension. That comes to near to 21,500. So that kind of moves is what we are expecting. In between, you have rounding numbers of 200, 300, 400. All this will act as resistance on the upside side. Potentially, not because it's a gray area. We can only project it based on Fibonacci extensions as to how far or how much it can go. But upside resistances on immediate resistance that can be seen, the major ones could be 21,500, which would also be the Fibonacci extension limit of 78. So downside, the moment you breach that lows outside the box, it comes down. That would mean 2,800, that level 20s. So that would be the first zone where the consolidation can continue in this range for some time. So that can support, and after that it comes to the gap of 2,700. Then it will go down to 2,300, 2,200. It would have another gap. The gap also would, so that it will be support. Right, and then if that is breached, then you will have 20,000, which is the major support, and then 19,900, which is a gap, and that will act as a support. And after that, 19,850 and 19, that will be 50 exponential moving average. 2,200 is also a moving average, 20 exponential moving average. So that's a good support zone. So 2,200 and 2,300 would be 300 would be a very good support because it's a gap as well as an exponential moving average. That would actually be this. So after that, 20,000 and 9,900 supports downside. Now look at Banknifty. So it is an all-time high, 47,250. So the first resistance above this would be the Fibonacci extension that could take it to 45,500 rounding number. Then 48,000 nearby would be the place of this Fibonacci extension of 78. It's a level from the upside to see, right? Downside 47,000 is a rounding number that could be a good support. After that, 46,500 would be a gap support and rounding number also that could be a good support. Then 46,000 is a rounding number, big rounding number support. right? Then 47,800, 47,655, and 45,100 is a 20 exponential moving average, which is a gap also very close by at 45,100. So 45,000 and 45,200, that zone is a major support on the downside. That's what you have to look at. So that's the support resistance of the Banknifty. Now that we have seen enough of candlesticks, price patterns, weekly move, all these comparisons and all studies, now let's get into momentum in the trend. We are using the RSI momentum, and we use multi-time frames of weekly and daily. And the trend we are using ATX, DMA positive and negative. That's only which you understand. Now it's very easy to know this. Like on the weekly and the daily, both Nifty and Banknifty are absolute bullish momentum above RSI 60 and ADX positive, that is trend rising up, bullish trend on both time frames, daily and weekly, on both indices. Simple, absolute bullish. No need to talk much on that. Let's get into the volatility. Here we have some interesting things happening. So the market has moved 3 to 5%. We had two major events of RBI policy on Friday, and also we had an election state outcome that came few days before. So we can understand that when market broke out following the election outcome, still the volatility was there because the event was not over. Once the event was over completely, even after that, the spike in the India VIX, the volatility index, the fear and greed index was continuing 12.47, which was slightly a divergence from what is expected to happen. So even now the VIX has not cooled off when the market is moving up. So that is the divergence, which could be an indication that there may be pause that may come in on the VIX volatility. Now, when we talk about implied volatility, there is actually nothing but an implied volatility, the volatility that is expected, right, versus the volatility that is actually experienced. There has always been a difference. If the difference is big, too big, then it's not good for the option sellers. Too small, it's not good. So it has to be in the 30 to 50%. So as long as that is there, it is a sell. The sell means option sellers will make money. So that is exactly where we are at 30% now. So that is also you have to keep in mind. Option sellers, even a trading market, can sell and make money only as long as this difference between the actual and the realized volatility is in a medium range, medium range rather than too much or too less. So that is also two important things that you have to understand with respect to the volatility trading on the short volatility strategies based on like short straddle, short strangles, and all this kind of multi-dimensional or non-directional, different number of strategies. These are all dependent on the volatility. So volatility has some divergence with respect to the and also it is ripe enough for a seller strategy. So volatility, that's about volatility. Now volatility is not too much. It is still at 12.5%. It's still in the low volatility zone, so it's still not that fierce. Nothing to be too much feared about as long as it does not touch the 20 kind of levels. Right? That's rising up. So that's rising up. So divergence is what we're talking about. Right? The open interest is showing short covering on the Nifty. Actually, there is a small mistake here. It is short covering on the Nifty, and it is long build up. Both are bullish. Right? Long build up on the Banknifty. Banknifty is more solidly bullish, but short covering sometimes can be explosive. So basically, it's very bullishness in the option. So that is something that we have to do. So there is some mistakes that's seen here, which no updation has not happened. So this page was not updated. So 13th and 14th have weekly expansion, Nifty and the Bank respectively. And here you have one, it is bullish actually. Right? Nifty is bullish and Bank Nifty also. The put call ratio. So put call ratio will indicate how the betting has happened. The ratio of the betting that has happened from the put option put writers and the call writers. That indicates which side it is more. So here it is bullish almost, but slight less than 1. So that way we can say that Nifty is slightly less bullish PCR. So that's about. So options OI of the futures indicating a long build up and a short covering in Nifty Bank Nifty. So that's bullish absolutely. Option OI PCR, options OI. PCR also is almost bullish. The levels, if you see, it's 20,900 and 21,000. Very narrow range for the Nifty for the first highest number of put and call writing is seen. Second highest put and call rating is here is 20,000 and 21,000. That is also within average range. So bullishness is what is prevailing there, but you can see that huge resistance that is seen at 21,000, right? Even though market is almost there. Similarly, good support can be seen at that about 47,000, right? Although market is not too far away from that. So the range for the Banknifty is 47,000 and 14,000. That's a wider range of 2,000 points. Second highest put and call rating on the Banknifty is seen as 45,000 and 47,000. So PCR and futures OI is absolutely bullish. So overall, its absolute bullishness is what the options OI and the futures OI is showing. Levels are narrow for Nifty and little wider for Banknifty, and we can see that there is some unwinding also. So Banknifty is still more strong with respect to PCR also. 1.25 is big PCR. Long build is absolute build. So Banknifty is more strong. So that is very good. So Banknifty, which was lagging earlier 2 weeks back, now it is exploded, and if it is further, like still there is more scope in the Banknifty stocks, especially HDFC and all, is still not in the bullish zone 16 on the medium term. So if that also happens, then this can skyrocket to 21,500 is very easily, is what we can understand. That will be there. Now let's move on. Now we are understanding the industry sectors, the different sectors, various different sectors. How do they perform collectively? So there has to be some sectors cycling keeps happening. When people move the money across sectors. Some sectors can be bullish for a period of time. Money will flow in from one sector and different industrial, business, economic reasons. Industrial sectors that contribute maximum to the index. If you see the IT sector, across the sector up moves, the IT sector has moved 2.4%, 3.9% metal, and the auto sector is 1.6% up. FMCG is the only sector that is down, that's 0.4%, and pharma sector also is kind of slightly down, right? So pharma and FMCG are down slightly. Reality is 2.2% up. So that way, if you look at it, it's there are industrial sectoral leaders that's driving the market up, and almost all the sectors are ready for taking long positions from the momentum perspective, as it is in both time frames, and the weekly and the daily. It's bullish, except for the FMCG, which is slightly moved down, right? All patterns are bullish across all the other sectors except the FMCG sector, which is slightly slipped down with momentum in the short term. It's still bullish on the medium term. Okay, so all across sector up move is there. There's no doubt about that. So let's just quickly look at this different sectors. If you see, you can see IT sector. IT sector, there's one thing that you need to be noticed, kept in mind, is because it's at a huge, major crucial resistance from where it had fallen down, probably more than a couple of years back, and it has been consolidating in this box range for so long, and now it is at that point where the gap is coming very close to that. So if at all there is a move that's happening from about this, it could be gigantic moves, it could be big moves to the all-time highs for sure. But if that's not happening, then it could be another way leg down. So you have to be slightly cautious there. It's at no resistance. It may take its own sweet time. It may consolidate some more time here before it takes it out, or it could reverse, or it could straight away go with the market and then break out of that as easily. So if that breakout, that is a good trade also on the Nifty IT index as well, and also IT stocks accordingly. You can see that. So that's a mega point to be noted this week. But otherwise, the metal sector has made big moves and all-time highs, momentum and trend rising up in bull zones, and auto sector's all-time highs. Small indecision is there at the top, but there is a bullish divergence, momentum divergence that is spread out beautifully on the weekly charts, and bullish momentum seen on the trends also, all-time high levels, absolute bullish. Pharma, look at that retracement from the top of all-time high. That momentum is still bullish on the medium term and small medium term. FMCG has taken a bit small hit back. It has slipped to sideways once, and then again the daily time comes, it has slipped to sideways, but bullishness is still maintained on the medium term. It's in a parallel channel. There is still scope for some more to the top of it. Realty sector is moving relentlessly without, as if there is no limit. It's going up and up, and that vertical moves is big vertical moves with momentum rising above the RSI 60, way above that, and the trend also is absolute bullish. So across the sector, bullishness is still maintained, although there is a small dip has happened in the FMCG only in the short term, not in the long term or the medium term, right? So let's move ahead and try to see how the major critic stocks that they call the HDFCs and Reliances and the ICC banks and the Infis and the ITC and Kodak Bank. So all the 7 major heavyweight stocks that contribute maximum. How did that perform? So HDFC has just touched the medium-term bullishness after a very long time. Look at this when it happened last time. So if at all that's going to happen and then it's going to take out that all-time high, then imagine where the market could end up. Right. Last week you see it's absolute wide range bullish moment. No doubt about that. Momentum has finally vertically moved up and climbed without no slop vertical moves in the bullish zone. So finally we have the HDFC Bank, the Reliance and the ICICI Bank, the 3 major giants that contribute maximum to the index of the Nifty, absolutely in bullish terms on the medium term. Finally, after a very long time, that's what is making the market move. But there's still scope for Reliance to move because it's in a trend channel heading towards the top. But the candlestick is slightly doji, so you have to couple up with that. It's at a zone where a reversal could happen. So HDFC and Reliance both are climbed in the bull zones, just managed, but at the place where a twist and a reversal can happen. It's still at that point. So be cautious with respect to momentum as well as the price action, both. It's heading towards the top of the channel on both, and it is at our 61 exact place of the resistance of the momentum. So almost just climbed and put its leg there, but anything would happen. Now ICICI Bank is also big white range bullish candle and all climbed back into the bull zone. So all major, this is what was required. We had a broader market that was performing extremely well, but there was a lag in the indices and the major heavyweights that contribute to the indices because of the fact that the FI selling had been happening for 18 weeks consecutively, and selling was all happening in big thick stocks. The big heavyweight stocks were selling was happening. Now it has changed. We have almost all of them. Even the ITC also climbing to the bull zones. The Kodak Bank is the only one that's slightly lagging behind, but it's also having rising momentum up, and it has been behaving like this in a zigzag mode within a range bound for long time. That's a behavior. It's a contra trade to Kodak Bank, but otherwise ITC, Infosys, TCS, Reliance, ICICI Bank, HDFC Bank, this is what makes the index. Rest of them are hardly few other stocks. So this makes almost all of the index, and that's all moving up means there's no non-stop. Slightly careful on the HDFC and Reliance, that's all. As long as that also gets and establishes itself in the bullish zone from the medium term weekly charts, then we are heading to moon. Institutional participation, look at this, 9,285. Last week had 10,000 plus crores of buying in the cash market. So it's 20,000 crores of nearly cash buying in the markets after 17 weeks of consecutive selling by the Fyers. So that's good news of institutional participation. Even DI is about 4,300 plus crores of buying, and then derivatives also the FIDA has moved up. So overall absolute bullishness and institutional participation is really great. Now let's try to understand the global markets, the global commodities, and the currencies. Currency dollar index has spiked up. It's a cup and handle, and it was breaking out, it fizzled out, and then took a retracement, took a support of the neckline, and now it's again moving up after a change in priority bounce. Momentum is taking a support of the RSI 40 and then bouncing up, heading up. It's still in the sideways on the medium term at 104 levels. It's still tension has come back with respect to the dollar index. And US, the INR also closed 0.2% up. It's not flat. It's flat in the sense that it's less than 2%. But remember, we're on the top at 83.5, all-time high, the weakest level of rupee that we have ever seen. That is disappointing, but hope this gets controlled by the central bank and then things will stay afloat. But if at all there is a break that's happening in the US INR currency pair, and that intervention of the central bank does not keep it in this 18.5, then can move up to the 84.5 and 84s and 85s, which is, as per technical charts, it's still a lot of space left before the top of the trend line channel. So slight worry or concern is there with respect to the group be having very big valuation. So crude oil, very crucial as a oil important company, very crucial for the economy. It is falling down and down 71 point down, and last week also it was a crash of 4.5%, which is big downfall that's happening. Right, big downfall that's happening. We had a big up move of 50% that happened from the bottom of the channel, and it reached and hit the 91 plus, and then it has started the retracement, and now it seems like it's in the bear zones and heading towards the bottom of the channel. That means would we get back to the $60 per barrel rate? We're heading towards the $60 rate for the crude oil, which is one way good. Alright, maybe not for the oil marketing, some of the marketing companies, but crude oil is falling like anything, right? Economy wise, it's good for an oil importing country like India. So capital, so markets also reflect the same. Now look at the gold. Gold hit all-time high last week after a very, very long time after the COVID. 2.5 years is where 3 years before is where the 3 years actually, no, is during the COVID is where the all-time high was made, and after that Ukraine war time it tried to make that but failed, and once again this Israel war time now has made the all-time high, but selling pressure profit booking has come in, and then momentum has slightly for temporarily probably dipped in the sideways, and trend remains bullish. Still at the top, it has not still breached that neckline, but we have to see whether the profit booking ends here and it will consolidate here and further makes the further up move or not. It's a very slow moving instrument. It's a hedging instrument primarily. It's an asset class which is used to hedge all the other risks that we take in the trading of other asset classes like the equity markets. So normally when the equity markets are rising up, the gold tends to not rise up, right? Whenever it's falling is where the shift with the safe havens of gold happens, and this time it was not true. When the market was hitting all-time high, gold was also trying to hit the all-time high, which was contrary, but now the profit booking has come and some momentum has been lost. That's about the commodities, right? Cooling off gold but still on the top, and really cooling off the crude oil, and a flattish US market. US indices, look at this. Dow Jones is green still. That's green for the last 5 weeks, right? 6 weeks actually, right? It's a sixth week of green candle that you see on the indices of Nasdaq, Dow Jones, and as a defined now the Dow Jones, it is heading towards the all-time high, and this has happened after inflation poll of news came in, and our market also was following that news, and then from there started this rally in our markets as well. Nasdaq also, it's all flattish move, but it still managed to close green. Remember, we are in the descending sets in the top of the area. Anything could happen. A reversal could come in, some retracements could come in. But we are close to the all-time market. US markets are green, which is positive, right? So to summarize, the crude oil is falling, really cooled off. Gold is also cooled off after making all-time high. Rupee is at the danger levels. Dollar is spiking up, and US markets are still maintaining the green. So that's the cues that you get from the global for the next week. Now, leaving aside all the different analysis that we have been doing, let's conclude with some actionables on the stocks. So here are the top stock picks for the next week. RBL Bank, it has got a inward head and shoulder pattern which has worked out beautifully and hit target almost. Now we have a rounding pattern there, cup pattern, whatever I call that. There could be some breakout that could happen, and then there could be a retracement to make a cup and handle or can further go up. So anything could happen here, so there could be good swing trade opportunities for the next coming week. The volumes are good, momentum is rising to the bullish zones, and the trend is also close to the bullish zones. Absolute probability of good risk reward trade opportunities are there, but keep your tight stop losses below this week's candle. That's very important. If it fizzles out, then you go below the candle and then forget about it a long time. But if it consolidates here, that will be opportunity for you to enter above this week's candle high, and that could be really good. But momentum trend is up, volumes are good, and patterns are also beautiful. Now, HDFC Asset Management Company, it's not HDFC Bank, it's a subsidiary of that. HDFC Asset Management Company is also showing that there is a trend line breakout, and next levels could be seen at 34,000, 3400 and 3800 after that. But swing trade opportunities with decent less than 1:2 kind of risk reward is possible because the momentum is bullish, trend is bullish, and the volumes are beautiful, and the trend line price action breach is clearly seen on the chart. So HDFC Asset Management long, RBL Bank long opportunities. But the next actionable is on Nifty. It's the double diagonal counter spread that you're seeing where we are selling the near week put and call options, and we are buying the hedges on the far week, and it is giving me good probability of profit, reasonable risk reward ratio as well as exiting before the expiry, and a very good range of 20,200 and 21,250. There is less likelihood that is breached. If it breaches on the right side, you can still adjust the put side, right? And the market stays in between, you get less profit, and if it spikes up and takes a correction downside, you make money. It's just for 5 days. Remember that. How much could the market? We have a 1,000-point range that we are getting. The estimated margin is very less, 50,000 for one slot. As per capital size, gross appetite, decrease position size, if the VIX is not spiking, and if VIX is actually, if the volatility is increasing, the strategy would benefit because it's a calendar, right? So that way the buys will not decay fast, and you still have money being made there. So it's a high probability trade. will have very good range at this position where the market is at the top, right? Double diagonal color respect. Our weekly option strategy on the Nifty. Now let's just wrap up. The last week, what happened is very clear. It's a continuation of the breakout after breakout is what happened, and the new all-time high after new all-time high, and the vertical movement is what happened. Remember, we are now in a rally of 22.5 to 25 kind of percent Nifty and Banknifty indices, and a cup and handle flag pattern, multiple breakout in the indices. Monthly charts, if you see, November month is a full engulfing. It's a big wide range bullish engulfing pattern that engulfs previous 4 months. That's extreme bullishness that is seen. No? So some consolidation can be expected in the coming months. So overall, green news markets in 6 weeks. Fyers buying since 4 weeks consecutively. Crude oil is cooling off below 70. And index momentum and the trend indicators are climbing up and up to the bull zones in the short term and the medium term. The bullish price action that you can see across candlesticks. Low VIX regime, it's still 12.5. And bullish open interest on the options and put call ratios, short covering rally and long build-up seen on the open interest of the futures, expanding, walking on the bands, Bollinger Bands showing extreme bullishness across the sector, up move, and this all gives hope for the bulls, expecting to have an even bigger rally from here. When it comes to the peers, the VIX is not cooling off despite the market has moved 3 to 5%. VIX is spiking up 10 to 20%, and the market is moving up. It's a divergence which we need to be cautious about, right? So daily charts show some consolidation on the top after the big vertical move, so that indicates that some retracement could potentially come in, or some consolidation that can be expected is what the bears will offer. Now, just to wrap up again, the markets have further broken out and made new all-time highs with vertical moves, and it's at the very top. So the direction is very clear. It's uptrend and it's moving up and up. But any vertical moves has to make retracement, has to consolidate. These two things has to happen. When it moves, we don't know. We just have to observe and study the probabilities of the support and resistance based on what we have been doing on the daily chart, candlesticks and all that. That's all in our hands. First is all betting on those possibilities and then having a tight stop losses and manage your risk, right? So the question now is, will it fizzle out, will it consolidate, will it reverse, or will it further breakout, continuing the rally after very 2 days of pause that really happens. It is very small as compared to the vertical big up moves. That's a question that remains unanswered. But as per the charts, my view is market is moderately bullish, absolute bullish. Right. Now, having said that, the implied volatility and the realized volatility spread, if you see the difference between the implied volatility, that is the India VIX, or the expected volatility, and the real volatility that we're getting, the difference is not too much or not too small. So it's in between and it's ripe enough for option sellers. That's what we can conclude. For the next, so there is a correction that again comes in. Sorry about that. So the ranges are different. So the ranges are not. We already seen the range. So this range is now getting to 20,000. So as long as this 20,000 is maintained on the Nifty, and as long as this 45,000 is maintained on the Nifty, that's a range, right? That's a range that we have for the company. So range has changed, right? So for the next week, if you see, we have already seen that it's going to be 20,500 and it's going to be 21,200, that range. That is where the range is there. And similarly, here it has to be 46,500 and it has to be 47,500 point range. It could, so most likely, this could actually, this can be put in as 48 also. If it is breaking out, it can go to 48,000 as well. So 46,000 has got supports that we've seen all that. So for the next week, the range can be 20,500, 21,200 for the Nifty, and 46,500 to 48,000 on Banknifty. But the crux is at 20,000 and 45,000. If that levels are maintained for the short term or the medium term, if that is maintained, then continuation of this rally, not the recovery. The continuation of this rally is what we could anticipate and expect for, right? So still, black swan. Remember that black swan could come in any time. There are inflation fears, interest rate views, Fed interest rate details are coming out this Thursday. So I mean, Friday can be very volatile for us, right? what's the decision going to be from the Fed interest hike? That's the whole world is going to be curious about that, and the market is going to be very volatile. So be careful on that, right? It could be positive as well as it could be. So black swans can come in any war or fear. All this can escalate to any moment, and things will go out of the hand. That's not allowed. We can only study probabilities. Remember that. So once again, be cautious. Place your bets careful. Ups and sellers, this is right time, as I said. It's okay, but you have to constantly monitor what's happening. But there is some correction and consolidation that can come in. When that comes, you have to be cautious about that. Market direction is very clear. Protect and use hedges always when you're using derivatives trading, especially. And also, this can be time for momentum investing and not value investing, because the market is already broken out. So don't go and buy blindly, things that are all valued right now. Wait for those, for those stocks that are not valued at, or those have types of less than, ride the momentum till it fizzles out. That's momentum trading and value investing. So there's a difference in that. With respect to trading, everything is clear. We already discussed a lot about it. So that's all I have for the next week. So please subscribe and share it to friends and colleagues to reach this out to maximum. Put in your comments and feedback and share to maximum, please. We are very appreciate help in this regard. And we also put a post in the Twitter and other social media channels. Check out that. We have regular updates there. We have daily videos that comes into. Apart from that, we have 3 or 4 posts of technical analysis that comes in every day when there is a trading. So don't miss out on that. Subscribe to those as well, especially in the Twitter, right? That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.